Hi, it's Paul from globaltradingsoftware.com, and this video is just purely for Elliott Wave. We have the Elliott Wave Indicator suite for lots of platforms. I'm going to be showing you a trade that I just entered yesterday, and I'm going to be looking at the TradeStation version, the NinjaTrader version, and the TradingView version. Basically work the same. All we have differences, it's just slightly different colours and the way it's presented, because that's the way the graphics works on the different chart platforms, but in reality the strategy is the same. So this is the TradeStation version. I'm looking at GGB, Golf Bravo, the stock. It's had a wave 4 pullback, and we're going to look more into that behaviour on the TradingView version. But I want to go through each version first, just to show you that the wave counts are the same. Okay, we can isolate those wave counts. We want to take it on a little tour around what's what. So on the main chart, we can see the wave count: the 1, the 2, the 3, the wave 4. The wave 4 has pulled back into the red zone. Now that's a 75% probability it's going to go on and hit that automated fifth wave target zone up here. Also, you'll see the EMA cloud here, part of our swing trading bundle. That's a non-linear support and resistance zone, so it's found support in there as well. At the bottom of the chart, we've got a few things here. We've got the stochastic with the yellow dots at the top here. That denotes a really strong bullish move up on that wave 3. So when the stochastic then pulls back against that and crosses over in the oversold zone on this wave 4, there's a high probability it wants to return to that false breakout type of zone there, back in the overbought zone. So that what we're looking for is resumption of that bullish trend. The green dots in the middle here are a bias indicator, part of that swing trading bundle. What you can't see just out of shot down the bottom is the Elliott Wave oscillator, but I'm going to look at that on a different chart. So I'm going to look at a NinjaTrader in a minute. But the main thing is, we've got the wave count. We want to trade the fifth wave because it's the highest probability move. All the software just basically measured this wave 4 pullback behavior. Stochastic's good, oscillator's good, pullback zone to the red zone, 75% probability, everything's good. We look to go long outside of this blue line, which is a 6-4 moving average high, which it did yesterday. There's still some room there on GGB. But that's the TradeStation version. We now look at the NinjaTrader version. Again, slightly different platform, but it works the same way. We have the wave count. We've got the 55 EMA cloud here, which is part of that swing trading bundle. We've got this wave 4 pulling back into the red zone. We've got the automated fifth wave target zone up here in blue. And as you can see, the price action just breached the 6-4 moving average high to take us in that trade yesterday. Then on the subcharts, we have the false breakout stochastic, works the same. There's the yellow dots, pulls back against it in the oversold zone on this wave 4 and crosses over. This is the Elliott Wave oscillator. That pulls back between 90 and 140% on this wave 4. So we're collecting this behavioral data, if you like, that wave 4 has behaved normally, and there's a high probability move of this fifth wave move on GGB. So again, that is the NinjaTrader version. Still the same thing. Still the same Elliott Wave count, the pullback zones, the automated target zones, the stochastic, the false breakout stochastic, and the oscillator. Everything's working the same no matter what platform. And then finally we get to the TradingView version. Again, yellow dots, as you can see here on the top of the stochastic. Just make that a little bit bigger. There is the oscillator pulling back between 90 and 140. We can see yesterday's candle on this bias indicator down the bottom here, that it is green, part of that swing trading bundle. We've got the same wave count: 1, 2, 3, 4. 4's found support in the red zone, again the same. Also at the 55-day EMA cloud, which is part of that swing trading bundle. And then we've got that automated target zone. So one of the things we do look at is, when we have that, is we need a sensible entry. We need it to come out of the 6-4 moving average high. But we also look left. Look at this pivot here. This is why I selected 655 for this long entry here because I wanted to make sure I'd broken this pivot because we had a pullback here, and we don't want to get involved in that that mess that could have resulted in another pullback. So to be safe, again, this is why we use this 6-4 moving average high. We want to be breaking out of that, and we want to look left and break out of there. The stop is always just below the wave 4 pivot, and because this is a very cheap stock, just 1 cent. And then we work out the risk to reward, and we can see the middle of the target zones around about 770. So that's a 1 to 1.8 risk to reward for a swing trading opportunity on a stock that could take anything from 7 to 10 days. This is a great risk to reward. So you risk $10,000. If it comes back against the stop and you sell your shares, you lose $10,000. On the other hand, if it goes back up and hits the target zone, you could win $16,000, $18,000. So that's the risk to reward is very, very important. Anything less than 1 to 1.6, I will not swing trade stocks on the daily time frame. That is my minimum requirement when I've got my stop in, my entry. I don't fudge the entry at all. The entry is where it should be. Then I work out my risk to reward. If the risk to reward is okay, it's a good looking trade and I'm in it. Anything else? Probably not. I mean, this is made to be simple. Okay, you find these opportunities, you look for the entry, you've got a good risk reward. The software does it all for you, really. You're looking at that behavior of the wave 4 pullback. That's the important thing. These pullback zones, these false breakout stochastic, the Elliott Wave oscillator, that all looks at that behavior of that wave 4 pullback, because that's the most important thing in an Elliott Wave sequence. If that all the stars are aligned and the behavior is good, we've got a good probability. If we've got a decent entry strategy and a good risk reward, there's a 75% probability at this moment that this is going to go and hit that 5th wave target zone. So it's a good looking trade. All the heavy lifting is done for you by the Elliott Wave Indicator suite. Obviously, that's part of the swing trading bundle, which the swing trading bundle includes the EMA clouds, the bias indicator, and other things. But really, I wanted to concentrate on that Elliott Wave today because it's, especially when swing trading stocks, it's dismissed a lot, but it's very, very valuable for swing traders to get into those high probability moves. It's not the sexiest move. The wave 3 is the sexiest move, but it's lower probability. You don't know when it's going to run out. People ask me, well, how do you get in a wave 3? Oh, I say trade the 5th wave, and if it just keeps going, it turns into a wave 3 because the rules change anyway, and it goes longer than the original wave 3. To get in on those lows, we use other tools like XPRAD Algo to get on those wave 3s, but this Elliott Wave, high probability trading, that's what you're looking for in these types of markets. Hopefully that helps. This Elliott Wave tutorial, we just wanted to show you that TradeStation version, the NinjaTrader version, and now the TradingView version. 3 different versions, all doing the same thing. So there's no excuses, they do the same thing. We've spent a lot of time developing these, so you get, no matter what platform you use, if we develop for it, you have the tools the same as everybody else.